Hello, and welcome to the final part of May-June 2023 Principle of Accounts POA Paper 1. So we'll continue with question 46. Allow me to get my highlighter. And here we go. Alright, so item 46 refers to the following table, which shows the summarized position of Foster and Scott Limited at 6 March 2020. So let's look at what is required of us. What was the capital of Foster Scott Limited at 6th of March 2020? So when you look at the information in the table here, you will see you have assets and you have liabilities, which means we have to apply the accounting equation to find the capital. So accounting equation is asset equal capital plus liability. But in this case, we have to find the capital, so it will be capital equal asset minus liability, substitution formula. So let's see the assets. We have current asset amounting to 100,000 and non-current asset amounting to 200,000. Therefore, assets equal, what's going on here? Assets equal 300,000. We have wrong figures here. We have wrong figures. Liabilities equal. So we have two liabilities here, 60 and 150. This will give you 210,000. 210,000. When you subtract this, you have 90,000. So the cost of the capital, the value of the capital is 90,000. So if you were to substitute this back into the initial formula, we have 90,000 plus 210,000, which is a liability, and that will give you 300,000. C20. Alright, so we have here 47. Which of the following list of activities shows the correct order of the stages in the accounting cycle before final accounts? So let's go through the accounting cycle. The very first thing we have is source documents. You have your source documents, you take out the vital information, you put them in the books of original entry, and that there is what you call journalizing. The books are technically known as journals as well. So first step is journalizing, so therefore we eliminate B and A and B. The second stage is after you finish journalizing, you have your totals and your individual balances. You'll be sending those to separate ledgers. So the second stage in the accounting cycle, the third stage in the accounting cycle is sending to ledger, which is posting to ledger. After that, you check for arithmetic accuracy and double entry through trial balance, sequential account, or bank reconciliation. And the final stage is preparation of financial statements. The income statement followed by the statement of financial position or balance sheet. So we have journalizing, posting to ledger, and then trial balance. The answer here is C. Mr. Ram, a shoemaker, bought a motor van for $11,000 in cash. In recording this transaction, he should. So we have two assets here. So we have the motor van coming in and we have cash going out. So assets increasing, you debit. Assets decreasing, you credit. So you debit the van and credit the cash. Debit, motor van, credit, cash. Okay, another thing to note is you have purchasing account. When dealing with non-current assets, they are not considered as purchase. When you're buying inventories to resell, then is when you will have a purchase. Else, it's known, if you're purchasing non-current asset, you record that as a non-current asset by its name. Because remember, non-current assets, they have to be depreciated. Current asset. Inventories are not depreciated. So when you have situation like this, look here, we have a non-current asset, therefore you consider it as a non-current asset and not a purchase. Item 49 refers to the following information issued in a prospectus, which shows the shares being offered for sale at par by a public limited company. Alright, let's see what's required. The issue is fully subscribed. So issue means that they put out X amount of share, and fully subscribed means all the shares were purchased or paid for. How much capital did the company raise? So here we have 2,000 ordinary share at $2. So this will give you 400,000. Then we have 10,000 preference share at $5. That will give you 50,000. So 400,000 plus 50,000 will give you $450,000. Alright, so here we are at question 50. Item 50 refers to the following table, so we'll go through the table just now. What is the total provision for bad debt? So bad debt, basically you're thinking is the business being cautious that, some of the accounts receivable will not pay the amount of money they owe or X amount. So you're using the prudence concept here. Alright, so let's go through here. So for year one, they have a provision of 1% of the accounts receivable. So 1% of 8,000 is going to give you $80. So for year one, the total provision is $80. For year two, you have to find 2% of 4,000. 2% of 4,000 is also $80, so there will be no change in the provision account. Right, so there is no change. In year 3, however, we have 3% of 6,000. So 3% of 6,000 is going to give you $180. Okay, I don't know what I'm writing here. So this year has now increased by $100. If you were to sum up these balances, we have 100 and we have 80. This will give you 180. So the total provision for bad debt is $180. Question 51. A photocopying machine valued at $5,000 depreciated at 10% per annum using the straight line method. What is its book value after 2 years? So we should be mindful that we're dealing with straight line depreciation, which means that the value of the depreciation is going to be constant throughout the life of the asset. So we have a 10% rate, and the value of the asset is $5,000. So $5,000, find 10% of this, and this is going to give you 500. So this here is the depreciation for 1 year. So they're asking for the book value after 2 years. So after 2 years, the asset will lose $1,000 of its total value. So 5,000 minus 1,000 is going to give you $4,000. Note that it's straight line method and not reducing balance. So it's going to be constant, the depreciation amount. Item 52 refers to the following information provided by Key and Friends. Okay, we have the information here. Let's look at the question. What is the bank balance in the receipts and payments account of Key and Friends for the year ended 31st July 2022? So we're dealing with receipts and payments. So these here are transactions that actually deals with money. So let's go through here. We have bank balance and 700. So I'll keep the receipts in purple, and I'll use another color for the payments. Okay, payments already. Alright, purchases of refreshment this year is a payment. Purchases of on furniture payment. Proceeds on raffle. Well, this year is a receipt. So you'll just see another color for just now. Inventory is neither receipt nor payment, therefore we'll leave this out. Donations to charity means that you're giving money to a charity, so money is going out of the business. Depreciation is non-cash, therefore you don't factor this in, just like inventory. And sales of equipment, is also money coming in. So we have 3 receipts. We have $600 plus $1,500 plus $700, and that will give you, what will that give you? $2,800. And the receipt, the payments are $500 plus $500 plus $200. This is $1,200. So $2,800 minus $1,200 will give you $1,600. The answer is alright, so moving on to question 53. Item 53 refers to the following balances at the end of a financial period. We have some items here, but let's look at the question instead. What is the total value of assets? So this should be a fairly simple question. So we have motor vehicle, asset. Payable, this is a liability, so you can factor this in. Receivable, asset. Capital is capital, and it has a credit value, it's not an asset. And we have building, which is also an asset. So we add these up and we have 40,000. Fairly simple. To which account should depreciation on office machine be transferred? So office machine is not something that is in the factory, therefore it will go in the income statement. But if we were to look here, we have 2 parts of the income statement. We have the trading aspect and we have the profit and loss aspect. The profit and loss aspect deals with the sales and purchases, whereas the profit and loss aspect deals with expenses, and depreciation is an expense, therefore it will come in the profit and loss section of the income statement. Which of the following, question 55, which of the following accounting entries should be made if goods are sold on credit? So we have 2 items where here we have a sale, and we are selling the item on credit, which means that we have persons who will be owing us. Those persons are known as receivable. And we have a sale. Sales means income. Income are credited and the receivable will be debited. Cash, the people did not pay, they did not pay. Debit sale, you don't debit sale, you credit sale because it's an income. Answer is D. A company sells 5,000 10% preference share at $5 each. The company will pay out dividends of, so to find this you have the number of shares, which is 5,000 shares. We have 5,000 share at the par value, which is $5, times 10%, because 10% is the rate at which dividend will be paid out. So 0 and 0 cancel out. So this will give you 2,500. Alright, item 57 and 58 will be based on the information here. What is the total value of statutory deductions? So we have, in terms of preparing a pay slip, you have two types of deductions. You have statutory deductions and we have voluntary deduction. Statutory deductions, they are mandated by law, which means you have to pay them. Voluntary deductions are made on your behalf. Anyway, let's look at the information provided here. Hands and Feet Company presented a summary of payroll records for an employee. We have gross wage, we have national insurance deduction. This here is national insurance. This is statutory. Income tax deduction, income tax is statutory as well. Salesman commission, this year will be added to the gross wage as in the amount of money you collect. And the last item we have here is credit union deductions. This here is voluntary. So the two statutory deductions are national insurance and income tax, and this year will give you, when you add them, you'll have $1,750. The next item we have here, what is the total value of the employee's net wages? So let's continue with the above. So we have 1, 2 deduction, and the final deduction is credit union due. The salesman commission is added to the gross wage. So gross wage, total wage when I receive is 10,300. And from that you have to minus 1750 plus minus 1750, this is statutory, plus 2500. What does this give you? Net calculator. Plus 100. Or 250. Or 250. So for 250 minus from 10,300, and you have $6,050. $6,050, that is it. Carriage inward and carriage outward are classified as. So first thing we need to know is both of these items here are expenses, and therefore they'll be considered only in the nominal accounts. You can refer back to part 3. Anyway, real accounts deal with assets. Nominal is expenses and income, and personal deal with receivables and payables. So just to M2. And final item. Item 60 refers to the following information extracted from the records of MD Limited. Alright, let's see what's required of us. The total indirect cost of MD Limited is, alright, so indirect cost. So indirect cost does not include direct wage, does not include direct wages or direct expenses, along with the items that have to go in the income statement. So first item we have here is factory rent. This here is also known as an overhead. Depreciation of office machinery. This here is office, which means it's going to go in the income statement and not in the indirect cost. Depreciation of factory machinery. This is factory, therefore it's going to be considered. Factory insurance. Yes. Salesman commission. This here is not part of the factory, so it's not going to be considered. Lubricant for factory machinery, and once again it's factory machinery, therefore it will be considered. Let's add this up. 7 into 9. 9 and 6, 15. So 15,500 is the answer. So that has brought us to the end of the final section. If you have any questions, if you have any queries on any of the questions, please feel free to leave a comment.